DHL and the Stern School of Business have released the new DHL Global Connectedness Index. Data was analyzed from 171 countries on 13 types of international trade, people, capital, and information flows. And I'm joined by the CEO of DHL Express, John Pearson. Thank you so much for joining us. Now, your report shows remarkable resilience with international trade in goods above pre-pandemic levels. What does this say about the theory that globalization is reversing?
Well, I think it says, above all, that it's not. It's absolutely not. And it says very clearly, I suppose, three particular things. One is that levels of global trade are 10% higher than before the pandemic. It says the levels of connectivity or connection across the four dimensions of people, data, money, and significantly trade, in the case of DPDHL, at the highest level of, basically at the highest level of connection and connectivity, and predicted to go higher. And thirdly, it says that globalization is by no means giving way to regionalization, meaning the distances traveled by trade are getting shorter, which would suggest that countries are trading with neighboring countries, regions are trading within their own region. That is a myth that's absolutely sort of debunked, so to speak, for the third or fourth or fifth time in a row. So I think it says that very clearly that the level of resilience of globalization is very high.
Yes, and in fact, the only category that shows a shift away from globalization and towards regionalization is the flow of people. Why do you think this is?
Well, I think the people KPI, as if you will, the people dimension of this report is dictated very much by the extent to which people have been impacted by traveling during the pandemic and are still maybe somewhat nervous about traveling. The big carriers, Lufthansa, Cathay, Singapore Airlines, said to me as long as 2.5 years ago that the world aviation patterns wouldn't get back to normal until Q4 2024. At the time, I thought it was a ridiculously long time away. But, you know, as we know, not so many people are flying to Hong Kong or China over the last months, or even perhaps the next few months. So I think that's dictated by that. And, you know, with globalization, we have a long way to go. You know, whether it's in trade, sort of 20% is sort of, we've got 80% of the journey left. And I think if someone said to me, you know, why is the scorecard on globalization so good every year? Well, firstly, people are seeing the benefits of it. That's a fact. And secondly, there is an awful lot of connection and connectivity to do. You know, on the people one, just referring back to that, only 4% of the people in the planet live outside the world in which they were born. So it's way different to the trade KPI, but is another KPI that shows how much there is to do.
Yes, and having said that, your research does show that companies and governments are actually nearshoring to regionalize supply chains. Do you expect this trend to rise in future?
Well, I think the data says that they're not doing that, because if they were doing that in a big way, the regionalization would increase and the distances that trade travels would decrease. That is also a fact. There are a lot of people talking about it and considering it, and there are companies that have absolutely nearshored, onshored, friendshored. What I'd rather say to that sort of type of supply chain management, which is very easy to talk about, but not necessarily easy to do, I'd rather say that, you know, the concept of China plus one and countries choosing bilateral agreements or multilateral agreements to locations rather to have their factories or their distribution centers is definitely happening. And people recognize the benefits of connection, but they're very aware of the risks of dependency. And that is quite a wide path you can walk down, and you can manage that by having more than one manufacturing site and choosing different optionalities, so that if one thing goes wrong in one country, your factory in Malaysia or indeed in China or anywhere else can pick up.
And just staying with China, your report confirms that the US and China are in fact decoupling. How is it then that they're still more interlinked than any other two countries in the world that don't share a border?
Yeah, so that's a great question, and I think the answer is relatively simple in the sense of the dependency of, those two countries on various products and supply patterns. And it takes a long time to change supply chains. It takes a long time to manufacture semiconductors in the US to a scale when one has suddenly decided to do it. So we should recognize that the biggest single flows are exactly as you said, still between them. There is some level of decoupling, which with the protectionism and the sort of the rhetoric that you and I read in the newspapers is hardly to surprise us. But as trading partners, they're still very resilient. And what there isn't is any fracturing, as you would have read, any fracturing of trading between the sort of blocks that relate to the two discrete allies that we're talking about.
Okay, thank you for confirming for us that globalization is in fact not reversing. CEO of DHL Express, John Pearson.